Hello, everyone. Welcome to the Talks with the ARC Trust webinar series. My name is Sarah Geis, and I'm the Senior Director of Engagement for the ARC Master Trust, a program of the ARC of Indiana. I want to thank you all for watching our webinar and video series. As a reminder, all of our webinars are recorded and available on our YouTube channel in the Talks with the ARC Trust playlist. Just go to youtube.com/@the-arc-of-Indiana to view or share these videos at any time. In today's webinar, we will be talking about the different investment options that are available through the ARC Master Trust and information to consider when your trust is invested. The ARC Master Trust administers two different special needs trusts that we call Trust 1 and Trust 2. Trust 1 is for parents, grandparents, or other loved ones who want to financially prepare for the future of someone else. For example, this might be a parent who wants to include their child as a part of their will or estate planning. Instead of the parent naming the child as the beneficiary of their estate, which could impact their Medicaid or SSI benefits, the parent would name Trust 1 as the beneficiary. By doing this, funds go directly into the trust, protecting the child's benefits while allowing the funds to be used for the things that the child might want or need. Trust 2 is for individuals who want to save their own money while protecting their eligibility for government benefits. This could include using the trust to save their Social Security benefits, income, or to shield funds received from an inheritance or lawsuit settlement. It's important to know that a person can have both a Trust 1 and a Trust 2 account. Trusts at the ARC Master Trust have the opportunity to be invested. Depending on the balance of the trust account, the trust could be eligible for multiple investment options. If a trust account has a balance of $20,000 or more, it is eligible for our standard investment option. The funds in the account would be placed into an investment portfolio that is set by the ARC Master Trust. This portfolio is conservative, and you can compare it to an investment strategy that someone might set for their retirement policy. The investment portfolio consists mainly of mutual equity funds, mutual bonds, and a small portion in the money market. Over the last 10 years, our average annual return on investment has been about 9%. Any gains that are earned by the trust being invested go back into the trust account. With this option, while the trust has the opportunity to gain, there is the risk of loss. However, our 10-year average has been a positive 9%. Trusts that are in the standard option are subject to an investment management fee. Please contact the ARC Master Trust for more information or if you have questions about this. Another option is our money market account. For trusts that have an account balance of $10,000 or more, the trust would be eligible for our money market option. Funds in a money market do not have a risk of loss, but there is a smaller return on investment. The return rate fluctuates with the market, but we estimate our annual average at about 3.6%. A common question we receive from time to time is, if my trust is invested or in the money market, are my trust funds still available to pay for goods and services? The answer is yes. Because of how our investment strategies are structured, if a trust is invested or in the money market account, the full account balance is still eligible to pay for goods and services on behalf of the trust beneficiary when needed. For both the standard investment option and the money market account, gains earned by the trust are considered taxable. The ARC Master Trust helps manage that process for our trust beneficiaries. Gains earned by the trust are not considered as income when looking at eligibility for government benefits such as SSI, Medicaid, or others. It just means that the trust needs to file taxes and potentially pay taxes on the gains earned. For both Trust 1 and Trust 2, the ARC Master Trust works with our tax preparer to file the taxes on behalf of the trust itself. This means that we are filing the 1041 and IT41 for all trust accounts. The fee for preparing these forms and any amount owed to the United States Treasury and Indiana Department of Revenue is deducted from the trust. The key people or trust beneficiary may need to prepare and file the Federal Form 1040 and the Indiana Form IT40 on behalf of the beneficiary. For Trust 1 accounts, the Form K1 is prepared and the ARC Master Trust will mail it to the key person or trust beneficiary prior to April 15th. The fee for preparing this form is included in the tax preparation fee. If no disbursements have been made from a Trust 1 account during the year, a Form K1 will not be issued. For Trust 2 accounts, a grantor tax letter is prepared and the ARC Master Trust will mail it to the key person or trust beneficiary prior to April 15th. The fee for preparing this form is included in the tax preparation fee. A grantor tax letter will be issued even if no disbursements have been made from an invested Trust 2 account. If the trust beneficiary files personal taxes and they find that they owe taxes themselves, their trust can pay for any owed taxes and the fees for hiring a certified tax preparer if they choose so to file their taxes. If you have any questions about the taxes or tax preparation, please feel welcome to contact the ARC Master Trust. Another option that is available is to not have the trust invested or in the money market accounts. In this instance, there would not be a taxable event to the trust or to the trust beneficiary, but there are also no gains earned by the trust. For an account that has a balance of less than $10,000, the trust is not eligible for either the standard investment option or the money market account. If your account has more than $20,000, you can elect to have your trust placed in the money market account if you choose. Likewise, if your account starts in the money market option and grows to over $20,000, it can be moved to the standard investment option. What happens if your account balance drops below the threshold for either the standard investment option or the money market account? The ARC Master Trust monitors account balances. If the account drops significantly below the threshold for either option, we will reach out to the trust beneficiary or key people to see if the account should be moved to another option. For example, let's say that someone's account has been in the standard investment option and their account balance drops to about $15,000. This might be a time where the trust beneficiary or key people will be contacted by the ARC Master Trust to see if they would want their account to be moved to a different investment option. We'd have these conversations with the key person or trust beneficiary to help ensure the longevity of the funds within the trust account. When a trust is established, unless otherwise stated, the funds received will determine if the account will be held in the standard investment option, money market, or not invested account. For example, if we receive an enrollment for a new trust for $15,000 and that is received to establish the trust funds will automatically be held in the money market account. Likewise, if we receive an enrollment for a new trust with an initial funding of $25,000, the trust will automatically be held in the standard investment option. If you would prefer a specific trust account for your funds to be held in, or if you do not want your account to be invested or in the money market account, please notify the ARC Master Trust at the time you set up the trust. We are also here for you to talk through the options and find which one might work best for you based on your unique situation. If you have an existing trust with us and want to talk about transitioning your account from one option to another, we would be happy to have those conversations with you. After a trust account is set up, it receives a unique account number that identifies the account type and whether the funds are in the standard investment option, money market account, or not invested. Trust 1 accounts start with the letter B. Trust 2 accounts start with the letter T. The third character in the account number determines if the account is invested in the money market or not invested. Accounts that are in our standard investment option include the letter V. Accounts in the money market option include the letter K. And accounts that are not invested include the letter N. So for example, a trust account that has a number starting in B1V indicates that it is a Trust 1 account in the standard investment option. Likewise, a trust that begins with the letter T and then also has the letter K in it indicates that it is a Trust 2 account in the money market option. Thank you all again for watching, and we hope that you have found this informative. If you have questions or would like to learn more, please visit us at our website, thearctrust.org, email us at thearctrust@arcind.org, or give us a call. You are also welcome to join us on social media to stay up to date with the ARC Master Trust and the ARC of Indiana.